Hi, everyone, and welcome to another episode of BSN's A Long Story Short. Today, we are delivering a discussion on trade and how blockchain can lead to many improvements in the world of supply chain and trade finance. Joining me on this topic are three experts, Jenny Cheung of IBM, Josh Satten of Protego Trust, and Winston Ma, who is chairman of the advisory board for Open Mineral, the first B2B online marketplace for global metal trading, as well as the author of The Digital War, How China's Tech Power Shapes the Future of AI, Blockchain, and Cyberspace. So I'm looking forward to this discussion today, see a few familiar faces. So I know that I will have a light workload as these people take in. Why don't we have the panelists here introduce themselves and their role within the company, and then that will give the listeners some context on how they're involved in the blockchain space. How does that sound? Why don't we start with Jenny?
Hello, thank you for having me for this webinar. My name is Jenny. I am taking care of the blockchain practice in Greater China markets. What we are doing is that we are helping different enterprise, governments, or SMEs to embrace new technologies like blockchain, IoT, AI, from the idea stage to the deployment stage. So it's my pleasure to be here today.
All right, thank you. Winston, do you want to jump in there?
Sure. This is Winston Ma. I'm a founding partner for a new VC fund, and it certainly has some touching points with blockchain and NFT. And I'm also an adjunct professor at NYU Law School. And besides that, as Ben you already mentioned, right, I'm sitting on a few boards, including my role as the advisory board chairman for Open Mineral, a Switzerland-based fintech company that handles metal trading in the digital context. They want to build up the first B2B marketplace for metal trading, which is one of the oldest industries that is mostly based on paper and telephone. So it's very relevant to today's discussion. Back to you, Ben.
Thanks, Winston. And last, Joshua, go ahead. Why don't you give yourselves a quick introduction?
Sure. It's a pleasure to be back. My name is Joshua Satten. I spent about 15 years running investment and banking operations for different banks and hedge funds globally, including Northern Trust, Citadel, and Blue Mountain Capital. For the past 4 years, I led the blockchain practice for Wipro, where I worked internationally with Fortune 500 companies, mostly in the supply chain space, helping to tokenize assets and helping to create better financing and accounting and reconciliation, automation and reconciliation efficiencies. And I've just gotten back into financial services, where I'm now the head of operations for Protego Trust, which is the first institutional trust bank in the United States that has a national charter that includes cryptocurrencies and data and digital assets. We're going to be doing trading and issuing and lending as well. And I think a lot of those pieces, if not all of them, will blend directly into future supply chain conversations that we're about to talk about in a few minutes.
Excellent. Thank you very much. All right. And before we begin, we have a quick reminder that in the description below, you can find all the essential information, such as the Twitter, the LinkedIn, and our website. So why don't we start back now with just a real basic overall question about the blockchain and the supply chain. We've been hearing this narrative for quite some time now. Anyone who's not new to the space, I'm sure, has been hearing about it since at least 2016, 2017, when we started to see these smart contract platforms take off. But what are you seeing now, I guess, would probably be a better question. Is blockchain technology actually improving our supply chains in practice? Are we here yet? Why don't you start with that, Jenny, since your role at IBM would probably, touch this space pretty well.
Well, so let's talk about economic globalizations, because during the whole process that the whole supply chains plus finance, they combine together, right? So when we talk about the globalization, we need to talk about it's not just economic alone. It also plus political and also cultural. Thanks to technologies advancements, so now we are having global exchange of goods, services, capitals, informations much faster compared with 100 years ago, right? And for that, how we can use technology to help different enterprise or governments can do global trade better, because after all, the economic globalization, it has different pros and cons. For example, like advantage, it will lower the price of the product. It will increase the production's productivities. And also for the consumer, we will have better, faster services. And for enterprise, they can leverage the global resources and also to have more stabilized supply chain. Because during the pandemic, we can see a massive drop in terms of demands and supplies in the global markets, right? And more enterprises, they are looking for a more digital and agile way to transform their whole supply chain process. And for this process, blockchain can play a massive impact and role to help them to facilitate, because during the pandemic, it rings the bells for all the enterprise how important automation is, how important is that all the participants or entity can share information. So that's point one. And for the disadvantage of globalizations, that we can see still we are facing unstable supply chain. Some developed markets, they have more advanced supply chains, and some developing markets, they basically have very weak supply chains. So during the pandemic time, they suffer the most amongst the whole global economies. And another one I want to point out is that informations are not equally distributed along different participants in the whole process. And that's also one part that blockchain can facilitate.
Yeah, could I add there?
You sure can.
Wonderful. I think that Jenny is hitting on some really important points. One being the value of blockchain and distributed ledger and databases to bring together companies across a given industry or within a given supply chain that aren't beholden to each other, meaning they're independent, and creating a consortium. So you have better information sharing, better supply chain transparency. On the other side, we run up against a big issue typically that large companies, large Fortune 500 companies outside of your Alibabas and Facebooks and Googles, most of them have very old technology and they're beholden to it. SAP, Oracle, Microsoft, stuff they put in there 30, 40 years ago. And so what we see is on the one hand, we have this great opportunity to use blockchain to create these consortia and these better supply chains, but there's also a lot of usage within companies to use DLT as a middleware to bring together their existing platforms, their existing systems, so they can have better real-time transparency into their own company. And it's an issue we run into time and time again. Major companies have different databases and different walls between different products, business lines, countries. It gets really messy for the big guys. And then lastly, I think there's the advent of tokenization, how different companies can tokenize their assets, how that can add to different kind of financing and lease payments, different types of automation, different types of contract management, asset management, very different values that you can get from blockchain based on who's using it and where. I think the funny thing is that this all started from people trying to be able to transact internationally, anonymously and easily. And now we're not talking about that nearly as much. We're talking about the value of connecting systems, companies, countries in a totally different way.
Joshua, Jenny has put some macro thinking there, and I could add some different perspectives from the commodities sectors. The last 10 years, I was a managing director at the CIC, China's Sovereign Wealth Fund, for global investing. With that, I got the chance to really get close to the large commodities companies, the oil companies, mining companies, and even agriculture companies. They all have very traditional infrastructure and lots of cross-border transactions, import, export, so on and so forth. So it's a really kind of tricky, even in the best of time. And during the pandemic time, actually lots of issues coming up, right? So I would say, when you look at these traditional industries, the pandemic actually accelerated their digitalization process and the adoption of blockchain technologies. So three very quick kind of points on that one. One is blockchain DLT technologies used for ESG purposes. It is not very obvious, but if you can relate to all the sovereign funds, pension funds, asset owners are going into ESG, especially after the pandemic, there's a lot of demand, for the tracing of the commodities. Whether you are dealing with oil exploration, out of the environment that you are making a lot of pollution impact, or whether you get the mining supplies, right, from controversial regions like the blood diamond or war gold, these type of things, right? And the second actually is about anti-fraud. Interestingly, like during the pandemic, you see major cases of fraud in the commodity sectors, which highlighted the vulnerability of opaque and paper-based supply chains. And the third aspect is more efficiency, like a supply chain financing. So since the industry is getting more digitalized, it's very natural for the players saying, "Oh, we have better data now, and we are in one system now. Maybe we can use blockchain-based supply chain financing model to make financing more efficient. Even for the small guys far away from the core enterprises in the supply chain. So I would say, the ESG considerations, the anti-fraud considerations, and the financing efficiency considerations are really accelerate the adoption of blockchain, during the pandemic for the global supply chain.
All right. Thank you, Winston. I want to follow up on something that Joshua said. Maybe this is a good question for Jenny, but he talked about blockchain within internal organizations. Is that something that you're seeing? Is that something that you're pushing with clients, or are you focusing more on like the consortium use cases where it's more external and connecting different companies?
Well, in the most cases, we are more focusing on consortium cases, right? It will place out more values. But in some cases, we can also promote blockchain for internal usage. Let me take an example. Let's say one bank, they might have 500 branches in different cities, okay? Currently, they are not sharing their KYC information among each branches. Like they're not sharing it. So which means they have to do their KYC process again and again in different locations, which is not efficient and also not optimizing the resources they have. So that's why for internal usage, like for example, eKYC sharing, it will absolutely benefit the internal process. That's one. The other one is because if one enterprise has thousands of suppliers and is globally, right? It's very important for them to collaborate with those suppliers because after all, they are external parties, but still for this enterprise internal usage. So for these cases, suppliers registration, reconciliations and settlements between them, it will be one of the most popular use cases we have for supply chain. Yeah.
And am I wrong in thinking that the road to adoption will be a little bit faster internally because you would have less compliance issues maybe with sharing data with external partners?
We can say the internal use cases will be easier for them to adopt, but the most difference between internal and external or consortium is mainly about governance model. It's mainly about if you have different participants, might be your competitors, who has what rights to access what data, and in terms of the whole network. Because when we design the whole solution, we need to have a future mindset, because it might grow hundreds of participants or thousands in 3 years. So you need to design it well from the beginning, have a very solid governance model in terms of the business model as well as the data governance model. So that's how we see it will take more time compared for internal adoptions. Yeah. Please go ahead, Joshua.
Yeah, no, I don't disagree. I think I just come from a different area because IBM's always had a very unique business model, especially in this space, where they've been very successful in building consortiums that meet the needs of certain industries, whether it's working with Walmart or global shipping consortiums. We've had, I think, Food Trust. We've had like 3 or 4 examples from IBM already that are really impressive, but that's IBM's business model, to spin up a really cool business and grow it. And when you work inside of older, larger companies like your Walmarts or Xeroxes, I posted a white paper that I wrote a few years back on some work we did with Xerox about how they adopted this. So anybody can look at it after. What you run into is they have a need for enterprise architecture and digital transformation. And in most companies, it takes 5 to 10 years to adopt new technology. That's getting it on their 5-year roadmap. That's getting it through vendor due diligence. That's adopting it. That's approving the vendor. And what I've seen time and again is the issue in the blockchain space for individual companies. Very easy to experiment, very easy to create an MVP, very hard to get approval for an entirely open source stack that's adopted and not be able to pin it against Amazon or Microsoft or SAP or a vendor in the future. There's vendor risk that hasn't been accepted by a lot of big companies yet related to using DLT for internal usage. But how they might use it, we outline here. One is just linking together their manufacturer database with their CRM, with their ERP, with their accounting, so they can have one global view of everything. Another one we did for a different electronics company was integrating their general ledger with their accounting and their payments and their leasing system to make a 30-day reconciliation process a 2-day process.
All right. That's a interesting thing to think about. I guess a lot of people probably in the blockchain space don't really think about the internal challenges, especially with corporations who are very averse to change. So why don't we keep moving on this? And let's go back to an issue that Jenny brought up earlier with globalization. And right now we have seen a bit of a regression on that side. We see a lot of miscommunication and mistrust, especially among the two leading superpowers who I think are well represented on this panel. So maybe we could talk a little bit about how blockchain technology plays a role here, right? And maybe we'll start with Winston because I know he's always eager to jump into this discussion.
Oh, not because I'm eager, just because I just wrote a book. So,
you're cheating.
The book title is The Digital War. So I think just to kind of put some quick points here, and let Jenny and Joshua to get into details. The way I look at it, U.S.-China tech competition relating to blockchain are in three main aspects. One obviously is the digital currency side, right? Central bank digital currency side. China is leading the R&D of CBDC. Not only ahead of the US, but almost ahead of all the major economies, because China is the only large economy that have tested CBDC at a large scale, and it can very well become the first country to launch a central bank digital currency. And then the second part, I think is about blockchain based applications. We talked about supply chain financing. Relating to today's topic, that's obviously a relevant topic. But when you look beyond supply chain, right? Look at the overall blockchain innovation ecosystem in China. Supply chain financing is still like the number one kind of focus of application, and then it has something like some other applications like food tracing, etc. Right? But when you look at it that way, China is very focused on adopting blockchain as a technology. But to the US side, I see most of the activities around blockchain are still financial activities related. Before CIC, I was 10-year Wall Street lawyer and a banker, so I'm not surprised by that kind of focus in the US, right? And the third aspect, relating to our host today, BSN, I would say, there's a US-China tech competition for the blockchain network in the global context. Last couple of years, US-China focused a lot on 5G network competition, right? It's a Huawei versus US efforts, let's say. But now, the new frontier is the blockchain network, right? It seems like a BSN essentially is taking Chinese blockchain going abroad, right? Getting to emerging markets first, and eventually may go to other countries as well. So I would say the digital currency, blockchain applications, and the blockchain networks are the three frontiers that US-China are competing relating to blockchain.
I think Winston's right on all accounts. This is something I've spotlit in the past few years, namely that we have seen literally 700 or 800% more patents on an annual basis from companies and China than we have in the US, namely Ant Group, who filed 2,000 last year when IBM filed 600. And I think nothing against IBM or Jenny. That wasn't a dig at all. That was laying out the scope that the biggest company in America is still only third or fourth behind the top 2 or 3 companies in China. And that collectively, those top 2 or 3 companies are outpacing American companies collectively by like 300 or 400% every year. So it's getting bigger and bigger. Winston's completely right that there's probably been much more of a focus in the US around 5G, AI, RPA, machine learning, definitely quantum, and cloud. We have put massive amounts of resources and focus on cloud networks in the US and securing cloud networks, and where China's put a lot of focus on creating infrastructure networks, which I consider to be more webs, how they can bring everything together and connect everything. That hasn't been the US approach. The US approach is very foundational, very layer-based, the bottom layer of everything and how we can secure it. China's definitely been way ahead of us around CBDCs and their usage of it and the proliferation of it. We're seeing the US just start to think about this, and it's very tricky here because China took the steps around creating legality gates in the usage of cryptocurrencies at the same time. They said, put the cryptos on pause. We're going to focus on doing this in a responsible way. In the US, we're trying to think about doing CBDCs and how to regulate cryptos by the SEC and the CFTC simultaneously. And it's all over the place. So I do agree. I think there's a fundamental difference in networks. I think that Winston is completely right. In China, we've seen a big focus around blockchain networks. I think in the US, it's been around computing networks in general, with or without blockchain, really focused on computing power. It's always been database-driven computing power here. China's really taken a lot of leaps around distributed databases and decentralized databases, where the US is focused on centralized computing power.
Yeah, that's somehow very correct, but still, from the blockchain perspective, okay, I will need to say yes. Chinese company like Alibaba, Tencent, they filed a lot of patents last year, so they are the number one in terms of blockchain. But if you know, IBM actually donates more code for Hyperledger Fabric community. Pretty much all we have, all in. The reason is that for us, we think the whole community will support the open source protocols. It's very different comparing with the Chinese company, because they also have their blockchain protocols. So they are not as open as Hyperledger.
That's a key difference. They have protocols there that we don't even know about or talk about or use at all. Very different in that respect. I mean, Russia too. Russia has completely different protocols they built out, and they might play around with Hyperledger and Corda and Ethereum, but they have their own that they've been developing for their own use that we haven't even thought about.
Yeah. So relating to global supply chain, this gets into the interoperability issues, right? How can we connect these different ecosystems?
It also promotes a new gate, right? Like you were saying before, with the ESG piece, it creates a gate and saying, we can use this and only roll out this protocol within our country. And that's how we control it. Or that's how we keep other countries at bay, and how we can control the trade in this area, by saying we only want it used here. And that's something that we've specifically not seen with Hyperledger Fabric and IBM. It's use it anywhere. We want everybody to use it. But we're definitely seeing country-specific rises there. And that could keep other countries in and out, and that could keep them behind also, if other countries really leap ahead there. Especially China.
Well, to be honest, I believe China, we will open more up about the enterprise protocol. But let's look at from IBM standpoint that we believe that blockchain is for different organizations in different countries can really collaborate with each other, right? When we talk about the globalizations, I talk about the economy, politics, and also culture. And in terms of the global trade, it actually combines 4 components. One is participants who are doing what. The other one is the product. And the third one is the money. And the last one is the logistics. So when we look at how blockchain can facilitate the whole global trade supply chain, I would like to say that for IBM, we created for the participants parts, we created consortium to ensure the legitimate suppliers can be onboarded in the blockchain consortium. We created with Cheung That's called trust your supplier. So that's for the participant part. And the other one is for the products. For the products we created with Walmart in 2016 is focusing on track and trace of the products. And also we track environments with the Everledger as well. They're very useful, practical use cases. And the next one is in terms of the logistics. We have the global international trade transportation consortium with Musk. It's actually so far biggest consortium in the world in real practice. It's having the data from 600 ports and it's covering over 50 ocean carriers transportations.
Sure.
So far, yeah. And the last one
has been a huge success. It really has, and it's caught on across other ports where they adopt it as a data taxonomy. Yeah.
Yes, exactly. But it's very important to collaborate with different participants because for TradeLens, you also have other competitors from us. They're also joining the platform. I think that's what blockchain can really support, is really to leverage everybody's resources to really sharing information in a secure way. Okay. And the last one for the last one I'd like to talk about is also for the tokenization, because we actually help central governments to tokenize their government bonds, securities. We help energy companies to tokenize the energy and sharing with different participants. And also, very interestingly, we are start looking into different physical or digital assets because more and more enterprise clients, they want to understand how can they tokenize their assets. This is very important. And last one is CBDC. Both of you talk about CBDC, absolutely very important. It's around like 90% of central banks, they're starting with CBDC. China, for sure, we are actually piloting it in different cities.
Right.
But CBDC can play very important, faster, cheaper, more transparent in terms of international settlements. I think it's very useful for international trade. Yeah.
I completely agree. I think that there's one other area, which is corporate-led endeavors where it's not a consortium, where you have Facebook trying to create their own coin, or specifically what JP Morgan's doing right now with Onyx. And I think that all of your use cases make perfect sense and touch on the physical supply chain, but the monetary supply chain and the financing and the money that moves it all matters just as much. And it matters in a very different way from what we do with TradeLens or what you're doing with Maersk. It matters because JP Morgan, and Bank of New York and a lot of these banks and companies like a Facebook or Xerox are trying to create their own supply chain and their own financing networks using coins and saving money from the banks and becoming quasi-banks in the process. And actually, that's my view on what I think Alibaba is mostly working on, how they can tokenize more and more of their own network to keep their customers in their network, whether it's related to the supply chain aspects you're talking about across suppliers, or having their own money or their own form of money so that they can keep that form of currency within their network between their customers and the people supplying them. I think that's going to be a whole different rise, and that's going to be really key to how we do or do not see the globalization of supply chains in the future, how certain companies are very successful, the biggest ones, in doing this and forcing these new networks. We're still in very early stages, it's still 10 years away, just like the rise of the smartphone. It'll be a while, but I think that's the other piece that falls in here. I don't know, Winston, what are your thoughts?
No, yeah, thanks, Joshua. I knew Ben knows why I should come in here, because I was former lawyer, right? So now you touch on very important data regulation issues or like a data privacy issues,
and cross-border transaction issues, big time. How to avoid them?
Exactly, yeah, because like when you talk about cross-border, right? Several, three things will pop up. One is data privacy, right? And then the second is interoperability. Can it function? And then the third is like standards. And not necessarily in that order, but you can see the standard issue, privacy issue, and interoperability issue can really kind of disrupt the whole thing, right? And at this moment, I would think this data privacy issue is or like broadly like a data ownership issue is probably like the number one global issue right now. Like if you look at China, US.
I mean, it's been the number one in the news between China and the US through most of COVID,
Precisely.
right? In terms of former President Trump looking to restrict certain Chinese companies for fears of whether or not there were data privacy issues backdoor or not. I mean, I don't know if we want to get into it, but it's definitely an issue. And it's something that folks have argued that blockchain can weaken or strengthen, depending on who you're talking to. That there's parts of it that we haven't strengthened enough yet.
Weeks ago, Didi, China's Uber, right? Didi's IPO in the US, right, has triggered this data security discussion. And we are not even talking about data sharing of everyday operation, right? We're simply talking about some kind of securities law filing of the IPO, company IPO. So comparing to that, right? Like Jenny's example, like 600 ports across different continents, right? So who owns that data and who manages that data, right? Huge issue.
Big time.
Well, to answer that questions, the port owns their own data. Okay, they encrypted the data and securely sharing the critical status. Okay, they're not sharing the raw data. That's the beauty of blockchain, right? If you use traditional method, it's impossible because take example from America, one trade process from America to China, it involved like 20 participant types. So there were logistic company, there were different ocean carrier, ports, custom on both sides, right? So it's a massive, tedious process, a lot of paper-based document exchange, a lot of human error. So that's why in 2017, like Musk was coming to us, was asking like, how can we just make the whole global trade more efficient? Because because it was very difficult. If they want to tap into each government's customs system, that's impossible.
So maybe like the first step is the standards of data format and documents.
Yeah, exactly. So that's why we use blockchain. We create open standard API. It's very easy for different participants. They tap into and send the essential data, encrypted data, to the whole platform. Yeah.
Well, the data is also hashed, right? And we don't talk about that with systems either. All we depend on is 256 SSL protocols to make sure that there's a secure pipe that our data goes through between systems when we're using apps on our phone or on our computer. But that does not mean the data is encrypted while it's in the pipe or while it's in either system on either end. It's usually not. So when you're using blockchain, especially Hyperledger Fabric as an example, you're inherently encrypting all data into a hash, and you can set it up such that the people participating in your consortium or in your platform can only see that data and decrypt it if they have a key and if they're permissioned for certain data elements, which is an improvement over most companies today where it's role-based or company-based. You can get down to the element of data. Only show it to Maersk in this port if it has to do with a Maersk ship going to that port.
I'm going to jump in here. I want to kind of ask Winston because of the book he wrote in the digital war and what we're seeing play out. And this is way off topic, by the way. So I hope BSN forgives me for this.
Yeah, we also have Jenny. We also have Jenny represents both IBM and China, right? And Joshua, I'm just living in the US, dealing with global businesses. So we a broad discussion, Ben.
I'm just curious if you think like with the Didi situation, right? I mean, because it's one thing when you have a limited number of participants in a consortium, and blockchain with the encrypted data can somewhat solve this issue. But when you're talking about these user-facing apps where you have millions and millions of everyday users, and you want to talk about data privacy, I mean, is there some sort of angle here for distributed systems and blockchain where perhaps users own their own data, or I guess certain countries own certain data? What do you think about that one?
Big topic, Ben. Actually precisely the topic. Why? Because for DD, right, its IPO plan was connected with its international business expansion. It's like China's Uber, so it has more than 90% of the car ride-hailing business in China, right? So its growth has to come from global business, right? But from the current situation, we can see how difficult it is, right? Because right now, just the IPO itself, right, has invoked China's data security review, right, of DD by China's CAC and other administrative agencies. Right.
Isn't there a more fundamental issue here, Winston? Isn't there a more fundamental issue between our different countries' policies in that here in the US, when we're talking about decentralized ID, there's 50 different startup companies that are trying to do it beyond clear. They're trying to do it in airports, in different countries, in different venues. In China, I think there's a fundamental question. Can you ever sell your ID? I think the country will always ultimately manage its citizens' IDs. And that's why they're so big in blockchain, because they're creating those networks preemptive of any businesses. I think that's a huge difference just in how the countries approach it. You can sell it here in the US. You can't sell it in China. And they'll set up a network for you.
I think you're partially right, because because overall China's regulatory system is very centralized, right?
Exactly.
So you look at the national social score system, that's very centralized.
Based with the right blockchain network, you take all these central databases and you create a truly centralized authority. That's that's what we're seeing.
That's right, Joshua. In May, right, China launched a crackdown on Bitcoin trading and mining. But at the same time, China's Ministry of Technology and Information and the CIC, they issued a promotional policy to encourage more blockchain innovation in China. And NDRC, right, which is the energy regulator, which is relevant to the crypto mining crackdown, also launched a new policy to promote a cross-country national data center system.
Yeah, it's very interesting because in China, you keep seeing this parallel path of centralization, but transparency between citizens. And in the US, it's a lot of democratization and a lot of capitalism and a lot of privacy. We keep everything private from each other. And there's a lot more open name and shame that you see in China. We saw it last year with the credit scores and them being settled and being open between people and towns. But we've seen it in different ways, but they're very different kind of parallel themes.
Yeah. But back to Ben's question about DD, right? I think it's really a good case study to showcase the difficulty of global data management, right? But let's assume DD had this IPO smoothly, and then it starts to expand, in the US and the Latin American countries, just like Uber, right? Have operations in multiple countries. And then eventually you will get into these questions. From China, they would think DD will be subject to US IPO regulators' review of the data, right? But from the US side, they will feel the US market data will find its way back into China, right? Just like the TikTok situation. So at this moment, right, we just see all the questions. We don't have answers. We need solutions to the three major issues I highlighted, right? The data ownership, the data standards, and the interoperability. And then we can really talk about a cross-continent global supply chain system.
Well, maybe that's Jenny's job. Maybe she needs to develop more solutions for these clients to solve this out. I think we pushed it a little bit far off topic, though. So maybe I want to bring it back to supply chain a little bit and supply chain financing, because I know that Jenny was going into that a little bit earlier. So I don't know if you want to talk a little bit more about the blockchain-based supply chain financing solutions that you have, and then maybe even tie it into CBDCs if you feel that's relevant. Because I feel like these two topics might go hand in hand, and then maybe that's another powder keg between the U.S. and China that could go off in the future.
Yeah, actually, for the supply chain finance, as you all know, we are very focusing on enterprise usage, right? So the current real practices in the global chain is a lot of SME, especially in developing countries. They have no credit, they have no financial support. So that's also put them into an unequal position when they're trading with developed countries, right? So that's why in IBM, we help a lot of banks and also big enterprise to provide the supply chain finance for their suppliers. especially SME. So, for example, we work with 12 European banks in Europe. So we create a consortium called WeTrade. We help the supply chain financing the SME in Europe perspective, and also we expand the network to other markets like Asia and also America, right? So I think in terms of supply chain finance, that's the benefit for the user side. But on the other hand, is from the banks. As I mentioned before, they need to spend a lot of human labors to check authenticity of the documents, because a lot of fraudulence are happening in the global chain, and it's very difficult for them to check it. So that's why supply chain finance, powered by blockchain, can easily help them to increase the efficiency and also make sure their risk management can fulfill the regulations requirements. Yeah.
Authenticity. Yeah. It's essentially the same underlying factor that we're seeing at play in the NFT markets also. This point of authenticity and certification, this point of a digital watermark, this point of being able to see that across networks and share it across networks without divulging other people that are in that party or who sold it, et cetera.
Yeah, I'm glad you brought that up, because I wanted to jump into it earlier when you talked about tokenization, and even Winston talked about like tokenization of like commodities. And right now we're seeing this just insane explosion on the NFT marketplaces, where digital art's going for upwards of $60 million. And then these little avatars, these crypto punks, are going for at least $200,000, these were given away free in the beginning. Right. And I'm curious, from like a traditional corporate world or a financial world or like the commodities world, are they looking at this at all and thinking, wait, this is all we have to do? We just got to put it on the blockchain and then suddenly it has, extreme value to it? Or is this just disregarded as like another crypto fad, right? Maybe Joshua, you have some insights on that, because you seem pretty tied into the public blockchain space.
Yeah, it's very much just the beginning of tokenization of assets across spaces. In finance, we're seeing it with stocks and bonds and derivative contracts. They're being tokenized. They are, for all intents and purposes, physical assets that are contractually obligated, that you can then manage the life cycle events and legal events and settlement events related to once you tokenize in an easier way. It's easier to connect systems and connect people when you have a basic thing that you're connecting on. Some industries, they use a barcode or a UPI, or they use a Swift code. Tokens are just giving you that other form of standard identifier for a given item and an easier way to use it. We're seeing the same thing in other big companies, definitely with printers, all types of physical assets, both so the company can track it internally and so they can sell it or lease it and manage that asset through retirement as well. We even had a big use case we worked on with Anheuser-Busch about 3 years ago. They wanted to tokenize their kegs and their pallets. There comes a time when the keg should be retired. They also have to do maintenance checks, and it would be easier to do it, a keg management and pallet management system, if they were individually tokenized and they could manage those tokens.
Mm-hmm. Yeah. Winston, I got to give it to you, because I know you're in the VC space now, and you mentioned that you are working on some NFT related stuff.
Very different from diamonds and Australian wool and all the cool stuff Winston's working on. Very similar, but very different.
No, Ben, I like your question, because at this moment, right, we see this evolution of NFT. First, it comes as a extension of the traditional art collectible, right? People say, NFT creates digital art, right? So it's a new form of art, and just like a traditional art, it's like a collectible, and it is a small but distinctive asset class by itself, right? But now, actually, it becomes arguably more mainstream, because it's not necessary. It does not necessarily have to tie to art, right? It can be tied to anything, anything of value. But now this is where I see the gap.
That's debatable. The value part's debatable, but go ahead.
No, precisely. That's where the gap is, right? Because Joshua used the word derivative. I used to be a derivatives trader at the JP Morgan's trading floor, and if you have a call option on IBM stock, you have a right, a claim on IBM stock if the stock price goes to X, right? Of course, if the stock price does not go to X, you don't have anything. But if you get with certain probability, you will get your hands on IBM stock, right? That's where you get your value over the call option. But here the NFT, right? It's kind of slightly different, right? If you got an NFT relates to a piece of painting, let's say, the NFT does not represent your right relating to the painting itself, right? It probably just proves that you paid that amount of money and for a description, for the access to see the certification of that painting. Yeah. So the connection between the token and the real asset, this value link is not as strong as a call option on IBM stock derivative. Yeah. So I think eventually we have to develop the NFT model a bit further, or or broadly develop the token model a bit further to make the much more direct link between the token and the underlying asset.
I think all roads lead to Jenny. So this would be a good time for you. Maybe let us know what IBM's doing in the tokenization space.
Yeah, surprisingly, actually, we are doing some of the NFT job for the governments because we help them to tokenize their government bonds and securities, right? It's the same as IBM stocks that Winston was mentioning. So we are not just working on Hyperledger Fabric, we're also collaborating with Consensus and also R3 because as he mentioned previously, it's not just about one protocol. We need to support multiple protocols and they can interoperate with each other, right? So that's one part. And the other part is that what is the value of that physical or digital asset? I don't think that will be decided by the technology. I think it shall be decided by the markets, right? So when we look at the NFT market, some of the initial items was just blowing your mind. you just don't get it. But still, market thinks has the value, is unique, and it will be having a high value. Why? Because that's unique. And blockchain NFT helping it to prove its uniqueness. It's only one. I think we're selling the uniqueness rather than actual value of that product. So that's how we see NFT. And for IBM, we also
more precisely, Jenny, right? The uniqueness is about the token. It is not about the asset.
Wait. It's all in the usage of the token, my friend. It's nuanced, though, because in the same way you could take a piece of art, a one-of-a-kind Mona Lisa, and tokenize it and sell it in infinite pieces so that each of us actually own a real piece of the Mona Lisa. You could make 10,000 limited edition Mona Lisa meme coins and sell each one of those as a separate token. And that's where Ben's really hitting on. One of them is of value. One of them, you actually own a piece of the Mona Lisa. The other one is about scarcity and demand. And it's like owning a pair of limited edition sneakers. And it's really up to you to decide what it's worth. But it's all about how the tokenization is used and the functionality of it, whether it's representing an actual asset or mimicking the asset and creating a derivative asset class. Very, very different. Creating a new way of entering into existing asset classes and creating derivative asset classes, totally different. And I have to add that as a bank, this is a big piece of what Protego is going to be looking at over the next few years, working with companies and countries here in the US and abroad to help them issue their own tokens and manage those tokens and the subsequent trading of them afterwards. Because let's be real, they're not really money. They're really investments for some and they're functional for other. But really, let's not keep in mind, they're all NFTs, man. Whether it's Xerox or China or anything. Someone showed me the fungible token that anyone's using. Nothing's fungible. Fungible means you can exchange it for something pari passu. People are trying. Everything's an NFT right now, regardless of how it's being used.
And by the way, we also do a lot of loyalty tokenization for the enterprise. Yeah, as what Joshua was mentioning about, because token can be used in multiple ways, and loyalty points is a very good use cases. Yeah,
and it requires a combination of a bank and an IBM to support you because you have to actually manage it like a cash equivalent. In the US, they tax loyalty money that you build up on your credit card if you get too much of it. So, I mean, loyalty points do act as a cash equivalent. There are regulatory pieces that go with that, data privacy pieces, taxation pieces, all other things that you have to do around that to do it in a proper way. And I think that's a whole different topic we didn't touch on tonight. How do you regulate that in the future, cross-border? Does China regulate it? Does the US? Is there other bodies that do so? Because there's a big gray area there that's going to emerge.
Totally.
Yeah. Jenny, I have one more question to pry into, how IBM's dealing with this, especially when they're working with governments. But like the custody issue, when you have traditional investors and suddenly their investments are represented by a token, how are we guaranteeing that these tokens are not lost or private keys are misplaced or right? I mean, because now we have self-custody issues, which are a much bigger picture, something that we in the crypto space are very, accustomed to having.
Well, in terms of security, we also use the hardware hot and cold wallet to ensure the custodies, right? And in terms of the actual in production, a lot of governments or central banks or enterprise, they are exploring. So they are in the pilot stage at this moment. Yeah.
We have actually worked with IBM here in the US to develop a completely proprietary MPC and HSM stack for specifically allowing companies and businesses and high net worth individuals ultimately to store these types of keys in a secure manner that would be quasi equivalent to cold storage and could revert to cold storage when needed. So it's very specific to HSM and MPC technology that we're seeing come out. Hardware security modules and multi-party computing, if anybody doesn't know what those mean. But we're working with IBM on it now. Yeah.
Josh, do you see it going that direction where, this new device, this HSM is now being brought into the enterprise world, or in every traditional investor is carrying around or locked in a safe or a bank vault or something? What do you think?
Yeah, blockchain has opened a can of worms into assets that are issued and regulated above and beyond the space of blockchain. You don't need a blockchain platform to issue a token or a loyalty dollar in the way that Jenny's talking about. And sometimes you might use it as a middleware between platforms. We're definitely seeing a need for companies and individuals to have really prudent care and control of their digital wallets. We don't know how to use digital wallets yet. It's going to be a whole new sector of cybersecurity that we've only kind of touched on and that businesses really haven't touched on yet. How they manage their digital assets in a digital wallet and do it in a totally secure way. That's what we need custody banks to do in the future. And that's what our business proposition is now. How we can bring that together where it comes to fiat, cryptocurrencies, or just data signatures and crypto tokens that we're seeing come off of these networks. It's really important to custody these in the future. If you paid $2 million for a meme and it's completely digital, you probably don't want to put it in a USB under your bed. You probably want it professionally managed at a certain point. And that comes down to core banking again.
That's
absolutely
right. Yeah. So very quickly to add on this, Ben, I think two aspects. One, I think, from an institutional perspective, right? When you think about a sovereign wealth fund type of guys, I think, when those big asset owners come into the play, some insurance products will be developed. The large insurance company will come up with a product. They will not provide insurance to individual retail investors, but for large institutional guys, sovereign funds, they will develop some products. And then the flip side is, for the retailers, it's really up to themselves, right, to find the best way to keep their assets safe. And maybe a cold wallet, from Joshua will be the best that they can look for.
It's going to be quasi-cold. It's going to be live, but it's not going to be hot.
Right. I mean, I feel like with the advent of DeFi, you definitely want some sort of hotness to it, right? But yeah, this is getting a little bit far off track, and I know it's getting late there for Joshua in the US. So I think we need to put a wrap on this. I don't know if anyone has any closing thoughts, particularly around some of the more core issues we talked today about governance and where we see this going. Between, I guess it's always comes back to China and the US, especially when, the BSN is involved because they're more on the Chinese side, but then a lot of their partners are based in the US. So I don't know, maybe Winston or Jenny, Josh, do you want to put any closing thoughts on this?
Guys?
Yeah, so very quickly, I think some global governance consensus is key, for the next step, global supply chain development, and actually for more broad kind of global blockchain networks to develop as well. Again, right? So it's about the standards of the data. It's about the legal issues of the data ownership. And from a technical perspective, the observability, right? Some are open, some are not open. People need to have some open dialogue, to get some basic governance consensus, before we can really move forward big time.
Thank you, Winston. Jenny?
Okay, so for governance, in terms of international trade from the GATT to WTO, I need to say we have already established different governance bodies, models for different purpose for international trade in the human society up to today, right? The reason we don't have one universal one is that most of the time one doesn't fit all. So it will mirror into our technical governance model as well. So we cannot just use one protocol. Will it be fully decentralized? Honestly, I don't think so, because everything is relative. There is no absolutes, right? So how much decentralization it involves, it will depend on the use cases, depends on the actual real scenario, because the whole globalization is very dynamic, right? And it comes to open blockchain and consortium blockchain. There is no one is better than the other. What is blockchain? What is DLT? It doesn't matter. As long as they can facilitate our human society, business, individual, improve more efficiency, that's good. One day they will collaborate with each other. That's for sure, because I don't think it's a barrier of technology. I don't see there is any difficulty, but we need to have an open mind, as open as blockchain, collaborate with each protocols. I think that will be the future. Yeah.
Thank you, Jenny.
Yeah, I would
Josh,
greatly agree. Yeah, no, I greatly agree. I think we can't underestimate the power of decentralization and distributed ledger to create centralized dashboards and centralized views. That's really the cool thing, to bring together all these disparate data sources or systems, be able to see them all in one place. That's been a large advent of what got blockchain where it is in financial services, and also where they've been stuck in financial services at the same time. I think we have to look at it, as Jenny said, from the consortium point of view. It can't be underestimated there, and the work IBM's doing is clearly pointing a way towards new supply chain networks from a consortium point of view that are they're international, they're cross-border. Some of them are really pushed by certain companies like a Walmart or Maersk. Some aren't. I think we can't underestimate the value of what we're seeing with your JP Morgans and your Alibabas and how they might do this internally and within their own customers. And I think we can't underestimate the value of tokenization. Finally, I think that we should not, or should be careful to not lose sight that the way that companies are looking to use this internationally and the way that protocols and technology tends to develop nationally are very different. McDonald's and Walmart and Maersk might be the ones to push a protocol or push a network globally, whereas you used to go to China and buy an iPhone and Nikes. Now you go there and you buy brands that are made and marketed in China, as opposed to brands that are made and marketed in the US. We're going to have protocols and systems that are made and marketed in China for blockchain that we don't use here, and vice versa. And we don't want to lose sight of that. And I think that that's going to provide a way towards easier governance for countries. But the real push is going to be how the companies themselves use those protocols, bring them together to unite different customer bases, and how we govern and regulate that. Like the DD example, like we're seeing with a lot of other examples.
All right. Well, that was a great summary. And unfortunately, we have reached the end of our time slot here. So I want to thank all of you for this very lively discussion. You all had very, very interesting insights on the situation. And hopefully this will not be our last conversation. We can catch up again in the future. Thank you guys very much.
Thank you, guys.
Thank you, Ben.
Awesome.
Thank you all.
Good night.